and welcome to another edition of Targets in Focus, where we take a look at three currency pairs and ask an expert their opinions and predictions for these pairs. Today I'm joined down the line by Stephen Margison, head trader at Guaranteed Forex Managed Accounts. Stephen, thank you for joining us. Let's start by looking at the pound dollar. We saw S&P affirm the UK's credit rating at AAA on Friday, and because of this we saw the pound rise against the dollar. But what do you see for this pair for the short, mid and long term?
I think it'll continue rising, not just because of that AAA rating confirmation, but also because with the problems in the euro area, we do get a bit of safe haven buying of the pound. So you've got a growing number of investors treat sterling as a safe haven compared to what's going on in the euro area. So you do get a bit of buying because of that. I think maybe the next Bank of England minutes, maybe I think April the 17th, if we get another 6-3 split, that's a neutral policy stance being confirmed, and we'll get a slow and sustainable recovery in the UK. So I think with those things, we'll get a short-term and medium-term rise in the pound. I'm seeing first target, well, we've had a low of 148.30. We've bounced really, really well off that. So I can see us getting to 54.15, and that's the 38.2% fib from the 2013 high to low. Then 55.90, 5600. That's the 50% fib possibility. And then as a stretch, 157.68, which is 61.8% fib. I mean, if things continue like this, it might get to 158, but I think 157.68, 157.50 might be as far as it goes before it falls back, which I think it will fall back. There is resistance at 158.80, strong resistance, and whether it just spikes up to there, we'll see. Very difficult because things are turning in the world all the time. We've got the North Korea thing going on. We've got things happening in Europe all the time. It's just been Cyprus. So you can see things happen all the time to change the currencies. But I think that's where we're going with the pound dollar. I think it's going higher.
Let's go on to looking at the dollar CAD. The recent negative Canadian data has caused the dollar to rise against the Canadian currency. What do you see for this pair for the short, mid and long term?
Well, there was a change in the fundamentals back end of last week. I mean, we've got good retail sales towards the end of the week, and we've got this thing with the Canada's 2013 budget report about the deficit reduction plan, as well as initiatives to boost manufacturing sector and improve labour skills. So that got praised from the rating agencies from the back end of last week, and that supports obviously Canada's AAA rating. So that's a strengthener for the CAD, as well as the retail sales signal that the economy may be recovering. We've got the GDP forecast out towards the end of this week. I think it's this week, and that's going to be a real tester of whether the Canadian dollar continues to strengthen or not. I have a feeling the GDP will come out better than expected, and the USD dollar CAD will fall as the Canadian dollar gets stronger. So the fundamentals go as I expect. I think the CAD should get support in the short to medium term. I'm looking at my fib lines from the low of 2012 to the high of 2013, and I can see the next target being 10075. That's the 38.2%. And then below 1, I think it'll go below 1 again. The target will be 99.90. That's 50%. And it could go as low as 9900 before it comes back. There's really good support at 98.14.
And lastly, let's look at the dollar yen. Today marks the start of Japan's new round of aggressive stimulus. So what is your future view for this pair?
How can we ever see the yen strengthening again? That's famous last words, I know, but the yen's reaction to the Bank of Japan says, it's aggressive money printing, like it's going out of fashion. It's likely to continue to harm the Japanese yen through the foreseeable future. So you can only see you might get a pullback in the dollar yen before it starts to go higher again. But I can see medium term top around 101.20. It might bounce off the 100. You might get a good bounce trade off that for a few days, but I think it's going to go through the 100, 101.20 to 101.50 in the medium term. If you're taking fibs, longer term fibs from 2007 high to 2011 lows, we're almost at the 50% retracement, 99.52. So we could get there this week or next week. The 61.8% is 105.20. You know, that could be a long-term target if the Bank of Japan continues doing what it's doing. Japanese government bond yields, you know, the 10-year JGB, you know, that's plummeted to lowest level since 2003. The Japanese yen is the most interest rate sensitive currency on the planet. At the moment, you can only see the dollar yen going higher. In fact, all yen pairs, anything against the yen going higher. You may get the odd pullback, but, you know, if you're in for the longer term, you've got to be short in the yen, I think.
That was Stephen Margison from Guaranteed Forex Managed Accounts with his predictions for 3 currency pairs. There will be another Targets in Focus on Wednesday. Take care.